Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data, including major markets news, analysis, and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ehab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on Forex and commodities, and in recent years I have also set up my own trading robots, signals, and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Let's start the session. In the US, focus this week is on the FOMC minutes from the October meeting due on Wednesday, where we will get more details on why the Federal lagged a clear tightening bias. Quarter 3 GDP figures in Norway will be the center of attention in the Scandi market this week. Recent key figures have not painted a particularly clear picture of the Norwegian economy in quarter 3, so uncertainty is high with regard to the release. Otherwise, focus is increasingly on the IMF decision about the inclusion of China in the SDR. No formal date has been announced, but November has been meant as the month for the decision. In the UK, CPI inflation in October is due on Tuesday, although we previously argued that the bottom for inflation was reached in September. We have been caught by surprise by a drop in gasoline prices. Today, the euro has fallen to a 6-month low, and the global stocks have managed to pare back losses as investors reeled from the aftermath of the worst terrorist attack on European soil in more than a decade. The single currency declined to 1.68 against the dollar, as we can see in the chart, extending a fall that has now reached more than 5% since October. After the European Central Bank hinted that it would inject more stimulus in the Eurozone's flagging economy. Also, Asian equities, meanwhile, all closed in the red in the first session of trading since Friday's deadly attacks. Those employers added 58,000 jobs, which was much more than the 15,000 increase that had been expected. The details were encouraging as well, with most of the growth coming from a 40,000 jump in jobs. The unemployment rate fell to 5.9%. It's tempting to think that this might nudge the RBA to drop its easing bias. But convinced, also, we don't expect any immediate rate cuts. The challenges in the mining sector and the China headwinds weighing on OC exports suggest maintaining an easing bias until this labor market improvement actually translates to firming in consumer. This week, we will watch these tradable events in London time. 17th, Tuesday at 9:30 a.m. UK CPI yearly release, and at 1:30 p.m. US core CPI monthly release. 19th of November, Thursday at 9:30 UK retail sales, and Friday at 1:30 Canada core CPI and the Canada core retail sales. I will talk in more details about some of this news. UK CPI will be released on November 17 at 9:30 a.m. London time. UK CPI yearly release should provide some volatility in the sterling, especially considering recent dovish comments out of Bank of England. If CPI were to surprise to the upside, we could see speculations of a rate hike back on the table. It's forecasted at minus 0.1%, previously the same minus 0.1. How to trade this news? We will be looking for a variable deviation of 0.3%. If the inflation number remained above 0.2%, we will buy the pound. If inflation number decreases to minus 4% or less, we will sell, or we will look to sell the pound. Even with a slight difference of 0.1%, market usually overreacts. If our deviation is hit, there is a strong possibility that the market will move more than 50 pips immediately. We will be looking to trade this release using after news retracement method. We will wait for the release, wait for market spike, and then wait for a decent retracement before entering the market and buying the option or placing we will buy the pound at 0.2% or more and sell it. But if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. US core CPI will be released on Monday, on November 17th at 1:30. US core CPI is expected to rise to around the 0.2%. With recent non-farm payrolls rising to the upside, and the fact end of the year's hiring may push next month's release even higher. A stronger reading today or this day will almost confirm a federal rate hike in December. It's forecasted at 0.2%, previously the same 0.2%. And how to trade this news? Our minimum tradable deviation for this release is 0.2%. If the release number, the core, decrease to a minimum 0%, then we will sell the dollar. So we'll sell the dollar at 0%. If the core release is 0.4%, we will buy the dollar. We are going to focus on the core figures or the CPI excluding food and energy, not the headline CPI. We will trade for CPI. We will be trading this release using also after news retracement method. We will buy the dollar at 0.4% or more, and we will sell at 0% or less. You can use the default pairs of dollar yen or euro dollar to trade this news. As usual, if we don't get the deviation number, I expect the market to follow the pre-release market condition and sentiment. UK retail sales expected to come in at minus 0.4%, and we will be looking for a minimum deviation of about 0.5%. I would recommend to trade if the figure were to surprise to the upside, as the pound is well supported from a long-term point of view. How to trade this news? The monthly retail sales report is a direct measurement of consumer activities at the retail level. A higher release is generally good for the economy and better for its currency. A lower release is considered negative for the economy and not good for its currency. Our tradable deviation or surprise factor for the UK retail sales is 0.1% to buy and minus 0.9% to sell. If our deviation is hit, we can expect the market to move at least 50 pips within hour. Of course, considering that we are expecting a 0.4% figure, I would recommend to buy only if the figure is at least 0.9% or better. We will be looking for an after news retracement trade for this release. And if we don't get the deviation number, expect the market to follow the pre-release market condition and sentiment upward. This was last news to talk about today. So then I'd like to thank you for attending today's webinar. We will hold the following webinar next Monday. Goodbye and see you next time.